we're live.
Yeah. Hello, everybody. Welcome to this live coverage. The United States is about to release the last release of the GDP on the first quarter of 2016. Sorry for the technical difficulties that we have experienced. That was delayed the live coverage for about 7 minutes, but we are here. We are with Yohay Elam from Forex Crunch. Hello, Yohay. How are you?
Hi, Mauricio. I'm doing great. Got back some sleep after the big Brexit night, and yeah.
Yeah, it seems that the dust is settled down a little bit, right? We are experiencing some pullbacks.
Yeah, at least today. Today is an easier day, but let's see. We never know when the next rush will come.
Yeah, and let's talk about the GDP. That this is 20 minutes to be released. What we can expect today?
Well, this is the third and final release of GDP. GDP in the United States is annualized. That means it's not exactly the same figure like in other countries. In the first report, it was reported that it was a weak growth of 0.5%, then it was upgraded to 0.8%, and now it's expected to be upgraded to 1%. Remember that quarter over quarter, it's only around 0.2%. So it's the second consecutive quarter of weak growth. Q4 2015 was also weak, but many expect Q2 to be already much better according to the numbers we know. So 1% is expected, is the number to look out for.
But that figure is already priced in, right? Won't be a big surprise.
Exactly. So I think, even if it stays at 0.8, it's not going to be a big surprise. 1%, also 1.2, also will not be a big surprise. If we have a surprise for me would be a fall back to 0.5 or worse, or 1.5 or higher, then we can see maybe a reaction from the US dollar, stronger US dollar in the immediate aftermath of the publication.
Okay, thank you. And do you think after the Brexit and all the noise that it happening, even after the defeat of the England against Iceland, do you think the GDP will make a strong effect in currencies this time?
I think that only for a short time, perhaps the currency pair that will bear the brunt of the move, maybe the dollar-yen, but again, we'll need a really big surprise, not only because of the Brexit, not only because of football, but also because it's the third release of GDP. So I think we'll have a short-lived response if it's a big surprise. But in any case, a GDP should impact the chances for a rate hike, and currently markets are beginning to talk about a rate cut in the United States, not a rate hike. So, of course, terrible GDP. If we have a outright contraction in the first quarter, people will begin talking about a recession and a rate cut, and this could, of course, hurt the US dollar.
Yeah, we were talking about the interest rate hike in the last month, but after Brexit, it will be very hard to see a hike. And right now, you told us that we are starting thinking about rate cut. So a hike is completely out of the table, right?
Yeah, I think at least in the next year. Well, I think that Brexit is not a done deal. We could still have what's called Brexit, or a deal that will basically maintain the same terms, just not in the EU. I think it's not over yet, but at the moment, assuming we do have Brexit, it's a big shock for the already fragile global economy. China is slowing down, Europe is not doing so well. Even the US growth is, as we're going to see soon, is weak. So let's show you the chances for a rate hike or rate cut according to the implied probability. So here we have it on the chart. This is for July. We had a small chance of a hike until Brexit, and now there's still a very small chance of a cut.
There are more chances that Tyrion Lannister, who will take the Iron Throne, than the interest rate hike. You know what I mean?
Yeah. So.
Sorry for interrupting you. But it was an easy joke.
Yeah. So chances are, as you said, very, very weak.
Okay, let me comment you that Valeria Bednarik is just coming. She is experiencing some technical problem, but she's doing her best to be with us. Why we don't move to charts, Yohay? What do you think will be the most important pair to watch today?
I think that dollar yen, I mean for the GDP release, of course, because this is the 30-minute chart of dollar yen. We have very weak movements here. Currently, it's strengthening just a bit, but it stabilized after the big shock. And, well, it's better to zoom in after the Brexit shock. So I think here there is some potential for a move a bit to the upside towards maybe 103 if we have a really great result, and maybe back down to 102 if we have a terrible result. I think that the pound and also the euro are moving more according to political developments in the UK. Talks about Brexit. There's the EU summit today. Dollar yen is relatively isolated. Of course, the yen is a safe haven currency, but at least for the short term, this is the pair where we could see movements. So yeah, maybe we'll add a few lines here on the chart. I'm also interested to hear what Valeria has to say about dollar yen. I know it's one of her favorites. And yeah, so the big levels as I see them for dollar yen are
For dollar yen.
yeah, 103.30 and 101.40. I don't think we'll challenge either of these levels on the GDP release, but maybe a small move to the upside or a small move towards, I mean, 30, 40 pips to either direction is possible.
Yeah, it's a pretty identified range there, and we are testing the upper band of the range. Yeah, otherwise we will see, you see 103.40, right? Yeah, it's a pretty big movement if we see the range before.
Yeah. Yeah, but we'll need a big surprise in the GDP. Again, not only because it's of Brexit, also because it's the third and final release, not the first one when there's the biggest market impact.
Yeah, that's right. What do you think about the euro dollar?
Euro dollar did suffer, of course, from Brexit. I thought it would fall even more, or react a bit more, but I mean, I thought we would have something like 40-50% of the moves in the pound, and it's much less. Also to the upside, it's much less today when there is a correction. Anyway, the levels that I'm watching, well, are older levels: 111.30, 111.90, and 112.50 on the upside. On the downside, we have now sort of this week's low, 109.60, and then the post-Brexit low of Friday, 109.10. These are the levels I'm watching. Currently, we're at 110.70, so euro dollar finally closed the gap, the small weakened gap. Of course, pound dollar is far from closing the gap. So, well, we could also have moves on euro dollar. Again, we would need a big surprise in the GDP release.
But do you see in any moment, I don't mean today or tomorrow, but any moment the euro visiting further low below 1.09?
Yeah, it's certainly possible. Brexit is a big event. It's significant damage, not only to the UK. It's not only the UK leaving the EU, it's also the EU being left out. And the euro is one of the biggest projects of the EU. It's not only open borders. So I think there's more potential to the downside. There's also potential for the ECB to provide more stimulus. We heard Draghi today didn't offer anything new. He talked more about coordinated monetary policy. And this could be anything. I mean, if the Fed cuts rates now and the ECB provides more stimulus, will not be necessarily bad for euro dollar. But I think economically it's bad news for Europe, and we could see further lows. 108.20 and 107.10 are the next levels under the post-Brexit low of 109.05, 109.10.
Okay, thank you. I have a question here. Is about, yeah, Valeria is with us or not? No, she's not.
Not yet. Okay.
Not yet. She is.
Okay.
I'm talking with her. Okay, okay, she's trying to. Okay, let's talk about gold. Do
Yeah.
you have any idea on performance fundamental or also technical performance? Okay, we have a Valeria here.
Hi,
Yes.
Hi,
Valeria.
I'm walking to the office looking for a place to sit because I lost sight signal. So give me a second.
Yeah, Valeria, you are performing like a periscope.
Yeah.
I'm performing what?
Like a periscope.
Yeah, service of Twitter.
Sorry.
Yeah.
I was in a private office here inside the office, but I was losing signal, so I had to move. So give me a second because
Okay, yeah, take your time. Take
that's,
your time. We were talking about the
yeah, I believe that
gold.
here we are, right? Everything's working fine.
Yeah,
You see
everything.
me? You hear me?
Yes,
Okay, here we go.
clear and neat.
And on time.
Yeah, and Taiwan.
Okay, then.
Yohei was about to talk about gold, about the fundamental stuff of
Okay.
gold and clinical reading of gold. If you want to continue while Valeria is getting ready.
Yeah.
Yeah. Go.
Um, well, the fundamentals of gold are quite simple. It's perceived as a safe haven. Brexit is bad for the global economy. Where will you go? Safe haven, gold, like the yen, like the dollar to a lesser extent. That's why you've seen this jump in gold. If we have a regret and no Brexit, of course, we could have gold sliding. Regarding technical levels, I must say I'm not following the price of gold that closely, so maybe Valeria can add more on the levels here with gold. So in
Yeah,
general,
I was watching today a bit, and we have a tepid advance yesterday, and today we're correcting a bit lower, right? But we are holding above. Remember the previous high around 1303 we had in April, I believe it was. May, sorry, it was in May. So this is my immediate support for me. But I do agree with you that the environment, where the ongoing environment favors some further goal gains. I don't know if you have commented this, but with what we had with the Brexit, there's little chances that the Fed will move rates this year, right? I don't know how your stats are, Yohay. I would like to see them. But anyway, that's for me the immediate support, and below it the gold can correct lower 1290, 1283, 83 is also quite relevant support. But for the most, I would expect some moderate gains from here on. Really not seeing gold around 1500 yet, but probably approaching 14. Because we have gained a bit much these days. But the fundamental background indeed favors the. Okay, I'm seeing your height stats. Fundamental background, I would say, favors the goal gains, and in fact, all safe haven gains, right?
yeah.
Yeah, we already talked about that. There is no option to. Well, yeah, there is always an option, but Shannon Jiren could think that there is not a good idea. That is what Yohei said before.
Yeah, there's even a chance of a rate cut now. So small chance, very small, but if we went from a small chance for a rate hike to a rate cut.
Those are chances for when? Sorry.
That's for July. So 5% chance of rate cut in July, and then in September 10%, and then in November, well, more or less the same. And in December, markets don't know if it's going to be a rate hike or a rate cut, but most probably no change.
Yeah. Okay.
Brexit, no way.
Yeah. It's a nice image.
Okay, so Valeria, what do you think we can expect in Forex for today with the GDP relay?
Well, I believe that the market will probably keep on trading on risk sentiment, we like it or not. Um, and data has moved to the background. Macroeconomic data has moved to the background, particularly also because we're in the last week of month and we don't have that much data, relevant data to share with or to analyze. I know that GDP sounds interesting, but keep in mind that this is the final revision of a number that has been already released twice, right? We have the advance the preliminary, and this is the final revision of US GDP. And honestly, the market is expecting a modest advance up to 1.0% against previous 0.8. I don't believe it's going to be tough to see such growth, right? And if we see it, I don't believe the market will believe it much, but the scenario has changed a lot. We are talking about economic slowdown, a real global economic slowdown. If we were concerned about China last year, you don't know how much concern you have to be this one after Brexit. But what I'm trying to say is that I don't believe that the US data, unless it's really, really different from what the market is expecting, actually triggers some.
Really shocking, right? Oh, Valeria?
Loss. Yes. Can you hear me?
Yeah, right now, yes, I can hear you.
Oh, so sorry. I was saying that.
Minute.
I don't believe that the data can really move much the market. The market will keep on trading on sentiment, right? And if we have some really positive figures coming from the US, maybe the dollar will recover its strength because it's also favored by risk sentiment, right? But pretty much that's my idea. I'm not expecting a large deviation, and if we don't have any, I don't expect much of a market reaction. I do believe that today the market is being led by stocks that are recovering ground, right? And that's the most we can expect.
Yeah, also a market that is tired after 4 or 5 days of Brexit.
Yeah, I do believe so. We are all.
Yeah.
We need a rest. We need to settle a bit.
Yeah. Okay. We are 5 minutes to get to the release. And as far as I know, Valeria, you are in Barcelona.
Yeah, I'm in Barcelona in the office. I arrive here on Sunday, and I will stay for a couple of weeks. It's really hot. I'm coming from the winter to the summer, so trying to deal with it, trying to deal with the computer, the connections, and a lot of stuff, and the difference in time. That's awful, really. A lot of difference, 5 hours difference, still having jet lag.
Yeah.
But well, here we are.
So winter is not coming with you.
No, winter is not coming.
Winter is not coming. So you and Yohay, and you are going
in a couple of weeks. I will come to winter in a couple of weeks.
Oh yeah, and this way it will be winter or winds of winter. I'm just thinking the Game of Thrones title. You know, I was in shock yesterday. I was in shock yesterday when I saw the Game of Thrones. Yeah, yesterday was a quite interesting day with England being defeated by Iceland. I know that you were watching the game, Yohay.
Yeah.
Is it kind of correlation with Brexit or whatever?
I think well, yeah, I mean, there were so many jokes about, it's amazing how England managed to leave the euro twice in 1 week and things like that. So, and I think they just didn't play good enough, contrary to Iceland that really, really wanted it. But anyway, here's so if we're talking about jokes, this was very strong on Friday. Sort of this WhatsApp thing. Britain has left the group of the European Union.
Yeah.
And
those are classic jokes, but I love it so much.
Yeah.
Brexit. The Hudson was the only guy that has a real plan to leave the euro.
There's an account, there's a Twitter account, Pedro da Costa. If you found it, yeah, okay. He makes so many different jokes over Brexit and market reactions and planning, and I have laughed all day long with his tweets.
Okay, Valeria, there is a user that he couldn't hear you about the goal and the levels and the immediate reaction. If you can say it again, please.
Yeah, I would say that we are seeing some downward corrective movement in gold, mostly because the risk is trying to imbalance, right? Trying to find a balance, trying to settle. The market is looking for some uh, to take a breath, right? But I would say that the former year high we had one around 13.3, right? And we have the spike last week, but this is for me much relevant. And the 1290 region or the immediate supports, I do believe that downward corrective movements could happen, right? Particularly if we have some positive data from the US. Not only today, I mean a couple of weeks of positive data, right? Not that a number will change the picture unless it's really, really shocking, which I'm not expecting. Uh, but I do believe that the market is still bullish and speculative interest is also bullish, so dips will probably be seen as buying opportunities. And I do believe that if we have scope to test probably 1400 over the upcoming weeks if the risk sentiment prevails. And we are less than 1 minute to go to news. If we
Yeah.
don't have a really interesting revision of the number, guys, don't expect too much. Don't feel disappointed for market's reaction. And remember a bit of delay. Yeah.
Here we
Remember, we have a
go.
bit of delay. Okay.
1.1, slightly
One
better than expected.
Slightly better than expected. Yeah.
And
1.1.
well,
Yeah. 5 pips reaction so far. Not much really.
yeah,
Stocks are not much doing anything. Yeah, well, anyway, it's a good number, but not, as I said, not something that can rock the world, nothing that can tell us, oh, well, US really recovering, it's a game changer, right?
yeah. It's two consecutive quarters of relatively weak growth. We had 1.4 in Q4, 1.1 now in Q1 2016. The second quarter is expected to be better, but uncertainty about Brexit, Chinese slowdown, Europe, elections in the US means that even if the second quarter is good, we're not going to have a rate hike. This figure now doesn't change the picture. And
Yeah. I know it's not US GDP, but I was reading yesterday that uh, the England represents 0.5% of the European GDP, right? So if we have this Brexit actually taking place, European GDP will be in trouble, right?
yeah, I already read today that many companies in the UK are talking about the fact that they're not getting any new orders from France or from Germany, and
Yeah.
no new investments from China. So I think, well, uncertainty already has an economic effect, and we'll see the numbers only. It'll take time to see the hard numbers, but from anecdotal evidence, it's already taking its toll.
Yeah, and you know, Germany is one of the most important trade partners of the UK, so it will be a very punitive for the UK. So what the DAX is right now is
I was,
rallying like a 2%.
there's,
The DAX. Go ahead, Valeria. Sorry.
there's something I don't know, and maybe there's something I don't know for sure, and maybe Yohay can help me out with this because I do believe it's quite important. Uh, we all know that the European countries that belong into the EU had to pay a fee, right, to be part of a euro area, right?
Right?
They have to pay all of the 28 members today had to pay like a fee to be inside the euro area, right? Which I don't know if the fee is different for each country or everyone has to pay the same. England will be paying the same as Greece, but I don't know. Do you know?
I think it's according to GDP. That's why a year ago there were fresh calculations that showed that actually the UK economy was doing better than previously reported, and that's why the UK has to raise its contribution and pay another, I think it was 1 point something billion pounds, and of course there was lots of frustration and anger in the UK. So as far as I know, it's according to GDP.
Ah, okay.
Because they're
I was
Germany and Malta are different countries. Sorry.
Germany?
Germany is it's the biggest country in the in the European Union, 80 million people, and Malta and Cyprus are, I think, less than 1 million people, and I'm sure their contribution is different. So.
Okay. Yeah, I can imagine, but I was thinking that probably the UK contribution should be among the largest one these days, and that will be a bad hit for all of the euro area, because that's the money that is funding all of the troubled countries we have been seeing for the past 4 or 5 years. Greece, Cyprus, remember Cyprus, guys? Greece, Italy, Spain, Ireland, Portugal. So the money that was meant to rescue those countries over these last few years was coming apart from UK, right? So if UK leaves, what's next for the euro area? That's why the market is so concerned.
Yeah, but you know, there is another, now there are just talks about re-referendum, or another referendum to re-ask people, because, you know, yeah, they are taking that idea. There is some gossip about that.
And we have a new referendum, and the Brexit Remain wins, and the social disarray in UK will set the world on fire. I don't believe a second referendum will be a good idea. I wouldn't do it if I were in the government.
Yeah,
people will.
Yeah, and it's also more uncertainty because we have to wait again. We have to talk once again about Brexit 2 or things like that, the sequel, and the.
Yeah, the sequel. And what do you think about today's? It is today, not the summit, the European Union summit. It's today.
Yeah, today and tomorrow.
Yeah, what do you expect
today?
What do you expect?
Yeah, well, they were set to discuss a lot of things. They were not scheduled to discuss this, but of course, I do believe that will be at the top of the agenda, right? And the feeling these days is that the rest of the members of the union are saying, okay, you want to go, hurry, go, move, because I do believe that they want to move away from this and try to survive afterwards, you know? But on the other hand, UK is saying, well, okay, we will see. Not yet. Let's wait till October, and we have a new prime minister. So I won't like to be in Cameron's shoes today in that Euro area summit. You know, they will discuss about this. I believe that the rest of the powerful countries inside will give him a rush and tell him, okay, go. And Cameron said, let's wait and see. Something like that.
Yeah, here's a picture of Cameron entering the EU summit in Brussels. He doesn't look very happy. He seems to be afraid of the cameras. Usually isn't that kind of guy. Of course, Cameron decided not to pull the trigger by himself, not to invoke Article 50, to leave this very, very hot potato, this very toxic move to his successor, probably former London Mayor Boris Johnson. I think that also Boris Johnson, like Cameron, Johnson of course supported the Leave campaign. They're afraid to touch it. They're very afraid of the consequences. I don't think there will be another EU referendum, but there might be some kind of, maybe according to some legal advice, Parliament will have to decide on that. And then I don't see how Parliament, which basically supports Remain, will vote for Brexit. So I'm not sure it's over yet. In theory, the UK has a great democratic tradition, and the people have clearly said their word. They want out. But
well,
you never know.
There is only 52%. It's not like 70% of the country.
Yeah, well, it's the majority.
Yeah, that's right.
We had a new president here, totally opposite party of the one that ruled Argentina for the past 12 years, sorry. And the winning party won with, yeah, something like 51.8 or such. It's still the majority, right? That's democracy.
Yeah.
And,
You like it or not.
and guys, do you see a real possibility that other countries to follow England?
Yeah.
Like you know, I mean, in Italy has like a 5 parties asking for a referendum. 5 parties, not only one party. 5 parties.
Yeah. I do
Yeah.
believe there's a good chance. I do believe that there's a
Run.
good chance, not only Italy, but unfortunately, I'm thinking that we may expect also some social disarray in Greece because we are forgetting a lot about Greece these days. But the bad conditions that force the government, the people, sorry, to vote and choose this anti-austerity government that ended being the real austerity one, right? Uh, it's still there, right? At some point, the people will regret or will complain or will start with social problems, and Greece could be the next one. Indeed, Italy too.
Yeah. I was also talking about Brexit as the beginning of the end of the EU. Of course, it can still be totally different. We could have Europe getting its act together, introducing, for example, some fiscal stimulus, improving the economic situation, making things better for the people living in the EU, and providing more democracy and more transparency. But as we've learned so far from the leaders of the EU, they're sort of, as in Greece, as you mentioned, Valeria, kicking the can down the road. So I don't see them. I see them trying to punish the UK, as you said before, and not trying to make the European Union a better place.
And they are everything but transparent, I guess.
Yeah.
That's the disconnection between people and Brussels. You know? People are very tired of this kind of European Union, and they feel that there is not the European Union that they want.
Yeah.
Yes. Okay, guys. So, Valeria, what is the picture today, right now, of the Forex market?
There has been no market reaction to the GDP revision, pretty much in line with what the market was expecting.
Valeria?
Well, okay, I think we missed her again. Okay, well, for you, Yohay, what is the current picture of the Forex market?
Well, maybe I'll try to complete what Valeria said regarding GDP. Not a big surprise, no big movements. The general picture of the markets today is a significant recovery. Always, Forex is never a one-way street. We had a big crash and then a second day of falls. Now we have a recovery in the pound, in the euro, other risk assets, a slide in the safe haven yen. In general, the picture, I believe, remains gloomy. It looks to me like the necessary correction, but the trend still remains down, especially for the pound, unless we have this regret. So that's still the main topic of markets. So I see more potential for falls in the pound and also the euro and also other risk assets. Maybe, yeah, we'll have a regret, maybe a higher chance in the next few days of some coordinated monetary policy action by Yellen, Carney, Draghi. As Valeria said, that's the main theme: sentiment, not fundamentals. At least this week. Next week we have the NFP, and other big events. So maybe we'll be back to normal. But I think that this week, even though we have a correction today, we're not in normal times at all.
Okay. Right now, I will like both of you guys, but Valeria is having some problem. I will want to ask you some questions, specific questions, and yeah, I'm looking for a good answer. Well, you know, as always, sorry, as always. Okay, can we expect Federal Reserve interest rate rates hike in 2016? If not, when are your expectations?
The answer is no. Valeria,
Yeah.
please. Sorry.
Okay,
No,
Valeria,
no,
here,
no.
yeah.
I agree. The answer is no, and maybe half next year, maybe.
So we don't expect any hike this year, and perhaps 2017.
Yeah.
Okay. Another question: what could be the lowest level for GBP dollar? And what do you expect for the cable?
Yohay?
I'll go first. You never know. This is a really crazy event. I would guess it'll fall under 130, maybe 128, but it's more of throwing a number in the air than it's the lowest level since 1985. So
Yeah. And what is your technical picture of the
Yeah.
cable, Valeria?
Yeah. Are you seeing it?
Yes.
It is a weekly chart. We're thinking that if the pair breaks below 130, we will have a sell-off momentum, right? Panic selling, and we will probably hit levels even below the 28 Yohay mentioned. But I'm not sure if those levels will be sustainable. You know what I mean? Maybe we'll have a 100, 400 pips line, but the pair will try to settle around 130 for me, or right below it. So it's pretty much, I agree with Yohay. We may have an initial reaction, but that's the most after breaking 130, mostly because of the psychological level.
And Valeria, we have a question for you here from Gold and Silver High. Gold and Silver, do you think the gold can come back to 1302 by today or tomorrow?
1302.
Yeah, 1302.
This 1303. It doesn't seem much likely because we have approached the level now. You're typing for me.
Okay, no, I didn't get your answer. Okay, let's
Yeah, I didn't hear your question. Which level are you talking about?
1302.
1302, right? These levels. We are quite close to the level, and maybe we can approach that region. But for most as we can see, and as I was saying, this is a former high, the previous highs, and approaches to that level should attract buyers rather than anything else. So not expecting a downward move towards that level now.
So on the upside view, what do you expect?
I would expect a modest recovery in between this week and the early next one, probably towards 1340, 1350, not much more. And as I said, maybe we can hit 1400s, right? If we have another bout of risk aversion and we have poor data coming from the US. That's the most I can see in the gold for now.
Thank you. What about the euro dollar? What are the levels to watch?
Well, it has been capped by this level, the 38.2% retracement of Friday's slide at 11.10. I would say that above 11.20 then we can go up to this region, 11.60, 70, and the next Fibonacci resistance. And we have a moving average there in the daily, I do believe, or in the forward charts. Yeah, we're actually not expecting much of the pair beyond this 1160, you know. There's no good reason to buy the euro these days. There's and the market risk sentiment. Maybe with some profit taking of this dollars rally ahead of a month end next Thursday, right? But I would expect that to be short-lived, and the market will favor selling on advances in high yielders.
Thank you, Valeria. And now on you, Yohay, we are in the last day of the month. Do you see rebalancing? and in which direction will be more hard, or what is your opinion on rebalancing for the last day of the month?
Well, in normal times, we would, well, after having such a surge in the yen and also the dollar and such a crash in the pound and also some other risk currencies, we may expect maybe a rebalance, as you said, of some well, pound buying and yen selling. Sorry, and maybe we're already seeing it actually right now, but we're not exactly in normal times, I would say. So I'm not sure we'll have this rebalancing in the next few days. I mean, if everything remains quiet, we'll have this kind of small rebalancing, another correction in the pound, another correction in the yen, the biggest movers. But that means pound yen will go up. But I'm sure we'll have so many headlines that will just overshadow these rebalancing moves. So yeah, I mean, headlines could go in both directions. So these are not normal times. It's still only 5 days after the Brexit vote, which is a huge event.
Okay, thank you, Yohay. So, what guys do you think to make a wrap up and to close the coverage? I will ask you, Valeria, and Yohay to do what we can expect from today onwards. Ladies first, as
Yeah,
well.
well, thank you. I will try to be brief because of my connection issues. Well, we have an upward revision, final revision of the first quarter GDP up to 1.1, really nice, but not enough, right, to convince the market that the US economy is actually growing. The dollar momentum we have seen these days has been fueled by risk aversion rather than anything else. And that kind of sentiment will probably prevail and continue leading the market beyond some intraday corrective movements. As I'm pretty sure that the market has not fully understood what Brexit will mean to the world.
Okay, thank you. And what about you, Yohay? What do you?
Well, I guess I agree with everything, so I don't have a lot to add. Low impact event. Brexit is almost everything in markets now. Today we have a correction after a big crash on Friday, another significant fall yesterday. I believe we'll have another resumption of risk off. Yeah, watch out for headlines. EU summit is more important than US GDP at this moment.
Yeah, we are a sentiment market driven.
Yeah.
Any headlines? Okay, guys, let me check if we have any other questions. Nope. So, anything that you want to add, guys? Valeria and Yohay?
Okay.
Okay, not anything. Okay, thank you
Thank you,
guys
guys.
for coming today. It has been a pleasure.
See you
Enjoy.
tomorrow morning. See you tomorrow morning, everybody. If you're
Oh
viewers
yeah.
of the morning show, so come
wait.
tomorrow to the show. That's it.
Yeah, thank you. Yeah, Valeria, enjoy Barcelona and enjoy the headquarters and with the FXStreet crown. And Yohay, thank you for coming today. See you tomorrow early in the morning. Okay.
Yeah.
Bye bye.
Thank you,
See
guys.
you.
Bye-bye. See you soon.
Bye-bye.
Bye bye, guys.
Adeu.
Deus.
Adeu.